Sir, GDP numbers came in much ahead of streets' expectations. Me and Amit were just talking about how RBI's policy stance could be going forward. Can we expect them to turn hawkish considering that inflation still lingers?
Thank you, Suyash, and morning to all of you all. So, uh, just looking at 1, 2 quarters GDP numbers and then taking a stance whether to be dovish or hawkish, I think it's going to be a little bit challenging. This is what our view is, and our sense is that uh, these GDP numbers have to sustain over a couple of quarters, and then possibly one can review what stance is there is with respect to interest rates change, whether upward or downward. 8th December is the credit policy date, if I'm not mistaken. And the general consensus on the street is that it's going to be a pause for one more time. And the commentary is what the street will be eager to listen into from the Honorable RBI Governor. Rate change, if any, our view is that first calendar quarter, that is Jan, Feb, March 24, you might see a small rate cut coming through if all the data points uh, point towards that kind of a stance. But I think 8th December is going to be one more pause, like we have seen over the last couple of trade policies. And first calendar quarter is what we can expect, provided all the data points are supportive.
Uh, uh, India remains the fastest growing major economy in the world with these numbers, even though they are slightly less than the last quarter. But few things that have come along with the numbers is a subpar agriculture performance and benefits of lower commodity prices year on year have basically faded away. The exports have been weaker. Do these pointers worry you? Especially agriculture.
It's not a large worry, let me say this. And the agri output coming below par is purely because of the erratic rainfall that we had this monsoon season. And this was expected. And I think this is what exactly the Honorable Governor also mentioned in his earlier policies. Along with this, I think one needs to keep a focused attention on the crude oil prices as well. Because that affects us to a great extent. We import more than 70-75% of our energy requirement in form of petrol, diesel, LPG, kerosene, etc. But these points that you pointed out, I don't think it's going to be a major worry unless and until you have a huge deficit.
And what do you make of the production cuts? You know, we saw additional production cuts of about 900,000 barrels from OPEC plus, but the oil prices did not react. Rather, they fell by about a couple of dollars on Brent. And as we speak, Brent is about $80 a barrel mark. The biggest overhang, I suppose, was the OPEC plus meeting for yesterday. Do you expect the oil prices to perhaps settle going forward?
I think this is a little bit tricky, Suyash, because historically speaking, this time of the year when the winter starts, especially in US and Europe, and as we all know, there are freezing temperatures. And generally this time of the year, the demand for crude oil, goes up from those part of the geographies. But we'll have to wait and watch. Winter is just setting in. So we'll have to see whether the demand pushes up the crude oil prices as we go into a deeper winter. But the reaction that we saw on fallback of the announcement of output cut and a lower trajectory as far as Brent and NYMEX are concerned, I think this is soothing and pleasantly surprising. Generally, the moves are the other way, largely because of the concerns from one of the largest consumption like India is China as far as crude oil imports are concerned. And over there has been a little bit lower demand or numbers. So we'll have to just wait and watch as far as the winter setting in and the demand that comes in from Europe and rest of the world where there are freezing temperatures.
Gaurang, while we await the PMI numbers today, even for India, apart from Japan, South Korea and China, the results that came in yesterday, the GDP values, one, the manufacturing sector GVA, gross value added, went up 6.3%, up from 5.1% the previous quarter results. Do you think that this is a big positive, or it is something that is just another factor, that a number that has been added, and the PMI is what we should be looking at more?
I think definitely this is good. Both manufacturing and services are going to be in focus as we go into the future. And our sense is that over a longer time horizon, the numbers from these two verticals would look much more stronger and better because of the concentrated effort by the government with respect to vocal for local, make in India, made in India, Atmanirbhar Bharat, and the PLI schemes that have been put in place will encourage both services and more so manufacturing side verticals to fire up at all cylinders. So my sense is that these two numbers will be very keenly watched out.
Now, Gaurang, as we speak, Flair Writing has listed at a premium of about 55%. The share listed at a stock price of about 470 per share versus issue of 304. Much ahead of what the street was expecting, and bumper returns we are seeing from some of these listings. Tata Tech almost tripled investors' wealth, Gandhar doubled investors' wealth. So for long-term investors who were in it to hold the stocks, hoping to get these stocks and hold it for the long term, but they are seeing such returns, what should they do? Like, should they perhaps book some profit off the table, or maybe because they were long-term buyers, average out?
This is what exactly we discussed, I think, about a week or 10 days back when I was on this program, and you had put forward a question with respect to so many IPOs hitting the street and whether there would be what kind of interest would it generate. So not only did it generate multiple folds of interest in form of subscription, but also the listing was equally stellar, barring, I think, Federal Financial Service, Fed Finance. That listed at a discount, but then it recovered the ground yesterday, if I'm not mistaken. So decent return. We had recommendation on IRIDA as well as Tata Technologies via IPO note, and we had issued a subscribe from a long-term point of view. Now look, yes, these kind of listing gains are always tempting and mouth-watering for retail investors to book out. But look at what kind of allotment you've got. I think the number of shares that retail investors got, depending upon the subscription and the proportionate allotment thereafter, would not be so big. So I don't think you should be in a hurry to book out from these names, because the number of shares that you would have had would have been bare minimum. And it would be prudent because we expect these businesses to do better on fallback of earnings visibility.
Gaurang, I'll drive your attention to another sector which is in the news now. Yesterday, of course, Ultratech took over the cement business of Kesoram Cements. Now, it seems that the big boys in the cement business are getting bigger. Few months ago, Adani had overtaken, Adani's Ambuja had bought Sanghi Cements. Last year, Adani themselves had, in a very $6.4 billion deal, had taken the Indian arm of Holcim. All the cement stocks, and whether it is JK, whether it is Ultratech, ACC, Ambuja, are showing very attractive returns, even if you look at the last 5 days or last one month. What do you make of this sector? Good time to look at it for long term?
Well, to be very honest with you, we've been, as a brokerage house, Geojit Financial Services has been always positive on cement sector, even during the time of monsoon, when the general perception on the street is that the construction activity will slow down, consumption of cement bag will slow down, and month on month offtake of cement bags would look lower. I was looking at some of the data over the last almost 3 years, especially during the monsoon season. And year after year, the offtake of cement bags has not gone down, but it has gone up. And gone are the days when, traditionally you used to feel that monsoon time in construction activity slows down. It is not so. It is equally at par than rest of the year. Point number one. Point number two, the fact that these companies are taking over smaller or rather weaker cement manufacturing players' capacity. It only goes to shows that how robust confidence they have in terms of the consumption and demand going up into the future. There is one more factor to this sector, that there are a lot of entry barriers with respect to new capacities coming up. So you eventually will have to look at smaller, weaker players who are willing to sell out their production capacity. Let me give a disclosure since we are discussing the name Ultratech Cement. We have a positive coverage on this company. It is one of the largest It has one of the largest manufacturing capacities in India. And a couple of things over here. I think state elections are done and dusted. So possibly state level infrastructure will start picking up as and when the new governments are sworn in. And next year you have a big election. Our sense is that because of code of conduct coming into place, there might be a slower run rate from government side infrastructure projects. But real estate is doing well, and so is private capex. I think these two verticals should keep up the demand.
That's Mr. Gaurang Shah for you, sir. Appreciate you joining us here on First Take.
Thank you.
Thank you.